What is up, YouTube, and welcome back to another Fritch Financials video. In today's video, we are back with week 8 of crazy bets in the stock market, courtesy of Wall Street Bets on Reddit. So if you are excited for today's video, as always, make sure that you like the video, subscribe to the channel, and turn on the bell notifications for all future uploads. School year is in full swing, but I am still trying to record these videos for you guys whenever I have time to do so. So if my upload schedule is a little bit off, I do deeply apologize, and hopefully we'll be able to get into a better routine as more and more of the year goes on. But we've got a lot of trades here to cover for today. Another busy week in Wall Street. We had the rate cut decision happening from Fed Jerome Powell and at the FOMC meeting. So now our interest rates down are at 4.25, which is good. But, we're going to see what people were able to capitalize it or lose money on as a result. This first person here comes in and says, I hate covered calls. And I'm like, dude, we're going back to the hating covered calls again, which is it's just, you can never hate covered calls if you're selling the option above your share price that you own. So he sold 3 contracts of OKLO, and they're $80 strike prices for these covered calls here. Now, he did this back September 9th. At the time I'm recording this, it is the 20th, and the market is just closed for the week. And when you're looking at this, yes, he is down technically $12,000, but he's not down that much. It's just profit loss as a result, because OKLO, which is an energy company, an energy play that a lot of people have been loving since the Trump administration took office, had a huge momentum swing and is just up a lot of money. It's now trading at $125 a share, which means that he will be forced to sell these shares of OKLO at $80 instead of at the $125. So again, if you think about it, it's about a $45 loss per share, and it's 100 shares a contract, which gives you $4,500 times 3 of those. You can do the math. That one's like $13,000, whatever the case is, which is where he's looking at right now. But the thing to keep in mind about is, say he bought in at OKLO at $70 or even like $60 or $50 a share, he's still selling it to make profit, right? And again, in hindsight of things, would he have guessed that OKLO would take off so much between the 9th and October 3rd? So literally about a month out here, which is usually about a good time for covered calls here. He basically it's up, over 125, it was at $80. You're basically up over 50%. You're up over 50% in a month. That is very, very uncommon and very, very unheard of. So can you hate cover calls for your potential losses or loss of profits? Yes, you could. But can you really hate it if you sell it, you make money on it as a result? Not really. He still made, $700-ish in premiums here overall, which isn't too bad. And again, any kind of share appreciation as well, which would be pretty nice. But rather than that, yeah, I mean, again, when people say they hate covered calls, people hate covered calls when they go against them. Just like any trade. God, I hate the stock when it goes against me. Well, of course you're going to hate it, right? When a trade goes against you, you're not going to sit there and be like, wow, thank you so much for taking away $12,000 of my gains here. But again, cover calls are a good strategy. It's good income based because you're able to make money on premium and then also exercise your shares at a higher cost basis. This next person doing the same thing. OKL says, oh, if only I had held. And he made $2,255 on these option play here for OKLO. He made over 94%, almost 100%. He almost doubled his money here, his investment in OKLO call options that you see right here. And he says, if only I had held. But again, would you have known that this stock would pump to 125? In hindsight, yes. But in reality, you made 100% almost gain on this trade. That's not too bad. It really isn't, okay? 100%, you could, if you full forwarded everything and made 100%, you wouldn't have to trade the rest of the year, and you would do better than the S&P 500 for the next 5-10 years, easily. So again, yes, in hindsight, we all get in this mindset of saying, man, I wish I had it longer. Man, I wish I had this. Man, I wish I didn't do this. But it's all obviously speculation because who knows what could happen. What happens if they close it for $2,300 and then OKLO sells off the next week 10%, 20%? then you'd be like, wow, I'm so glad I did that kind of thing. So whenever people say, if only I had held, yes, it's that FOMO and you're missing out and that uncertainty that you have. But that's why when you're trading stocks, you're trading options, you go in with an exit strategy and an entry strategy, no matter what. So that way you don't have this FOMO that you get from a stock pumping up 50%, 30%, whatever the case is. So I wanted to put those two in there because that's kind of just like the idea of being like, man, I hate this. Man, if only I did this. We all could look back and say, man, I wish I bought NVIDIA when it was like $1, like many, many years ago. Well, yeah, of course. But in the reality of things, we just never know. It's the human mentality, the mindset here, right? This person right here put a YOLO about $85,000 worth into ACHR $10 call options that expired January 16th, 2026. And he's up about $38,000 right now. Now, I want to bring this up for two reasons. One, this is a good idea because he's buying these longer term options, as you see right here. It expires January of 2026. So at the time of recording this, you're looking at about 4 months still to go for ACHR to go up to about 1096. And right now it's almost at $10 a share, so there's a lot of time to go. And also what you will notice here is that this average cost is not usually what's listed when you're buying options on the options chain. He is being a person who is dollar cost averaging not shares, but also options. And believe it or not, you are able to do that. If you buy an options contract and it goes against you, but you're still very much, your fundamentals, your analysis hasn't changed, you could just buy it at a cheaper price and lower your average cost on your contract. So this individual right here has legit done that, and this is a good strategy. If you have the conviction, it doesn't hurt to have extra money left in case you $1 cost average your position. So say he had a 200 contracts at $100 a share. Then he bought another 200 contracts at like 90 cents a share or 90 cents per contract. It kind of gives that 95 break even or something like that. So that's a very good strategy to lower your cost basis if your fundamentals, if your conviction has not changed. So shout out to him. He's up $38,000. Absolutely unbelievable so far. Also, ACHR is a company that I have a position in my portfolio as well. Very, very small one, but definitely could work out long term. So shout out to you, my friend, for making over 30 grand total in your return so far. Now, this person here, this was a very interesting one because he bought 10 contracts of $10 call options for Snapchat. And he said, needs some advice. The thing is, though, which is very interesting, look at my dude's expiration date. It's January 21st of 2028. So you're looking at over 2 years for Snapchat to basically be at $13 a share. And it usually trades, from like 7, go up to like 10, like 11, and a Snapchat can figure its way out in the next couple of years as a social media platform, especially, with, TikTok still being like, controversial and stuff like that. If Snapchat can figure it out, that's very, very possible. And he says, needs some advice. But like, my dude, you just bought it. He literally bought this yesterday, these contracts. He bought these contracts yesterday. He's down $170, which means he probably bought when Snapchat was higher up on the day because it was down about, I think, like 3% on the day yesterday. So he probably bought it like right at market open and maybe probably lost money there. But again, dude, need some advice? There's no advice right now. Just chill. You have over 2 years to figure out what Snapchat's going to do. Now, obviously, if it goes more against you, sure, you should already have an exit strategy in case it goes against you. But if you're looking at 2 years for Snapchat to go to $13, it's very, very doable. Right now, that would be looking at about, a little over a 50% upside return, I believe, give or take, or maybe a little bit less than that. It's at $8 right now, so a $5 move out of the $8 right now. Yeah, he's looking at a little over a 50% move to the upside, but it's over 2 years, and it's a social media stock that's technology and AI and everything else. Is it possible? Sure it is. But need some advice? Let it play out a couple months and see what happens. Snapchat's had a little bit of momentum behind it. It was down at $7. Now it's now it's up over $8 or so as of recording this. So, let it play out a little bit here. But I think it's interesting how he bought it and immediately was like, I need some advice. It's like, dude, you just opened the trade. And a lot of us get into that, myself included. When I first started trading, I was just like, oh my God, what do I do? I was looking at it. I was refreshing. I was refreshing the price. I was looking at it over and over again. Take a step back. You're in a position. See what happens the next, week. Do a weekly recap. See what's going on with your positions on the weekly basis, on the monthly basis, and then reevaluate your position, right? And worst case scenario also, when you buy multiple contracts, you go offset some of them by selling off some and keeping some other ones. It's always not a bad strategy there to do as well. But I just thought it was interesting how you wanted some advice already, but you already bought it. Like, I don't know, dude. Wait and see what happens. Nobody can tell the future what's going to happen. Snapchat could announce they're going to buy TikTok and it's going to shoot up 15, 20% maybe. Who knows? Right? Nobody knows. So, very interesting. This one is another energy play with uranium, which again is kind of feeding into that OKLO position because these energy stocks have been doing very, very well with the Trump administration right now. So ticker symbol is U. What a great ticker symbol. And again, another example of playing the energy field right now. And playing the energy field isn't bad because of the administration right now. Renewable energies are getting absolutely slaughtered because of the administration, whereas they did very, very well in the Biden administration, right? So having this rotation to, where the money's going to go to, like say we have, a Democratic Party back in office after this term, maybe renewables get a spike up again. Who knows, right? Or if we stay in the Republican side of things, maybe these kind of energies go up with uranium and stuff like that, right? And nuclear reactors, whatever the case is, right? So who really knows? But at the end of the day, again, another position here I liked that was he bought these contracts back in August because again, you have the administration that keeps talking about, nuclear energy and stuff like that. And bought Thursday's contracts. He also dollar cost averaged these just like the ACHR play. And he's up, 250%, made about $8,800. Which is absolutely awesome. So shout out to you, my friend. Right now it's at $15 a share. He says on the way to 20. It goes to 20. He's going to make even more money as a result of it. Can't complain. And again, I think there's a lot of momentum behind the nuclear energy right now. So I don't see this slowing down. If you started to see a little bit of a slowdown, maybe start to take some money off the table, maybe. But he has till January of next year. Again, a very smart play. He went about 5 months out for this position here, which again is a very, very smart way of doing it because it lets the stock do its thing instead of gambling on short-term moves. This one was funny. Not really sure how futures work, but I shorted the euro yesterday, which is the currency, and I woke up to plus $11,000. You can see it right here, plus 11 G's right here, almost $10,000. And this is scary. Not really sure how futures worked, but I made money. Cool, fridge, that's awesome. I don't even know what's going on here. This could have gone so badly against him. Like he could have been down $11,000, $12,000, $15,000 because if you look in the next image, which I don't have here for you guys, but the next image was he was 40 something X leverage, which means that leveraging, as we know, is, boosting up how much money you can make, but also how much money you could lose. So he could have lost $11,000, $12,000, $13,000, $15,000 without even knowing it. But he's not even sure how futures work. Now, do I believe that? Obviously, only time will tell, because who knows, but that's very, very, very risky behavior right there. If you don't know what your trade is you're getting into, you got to be very, very cautious of what's going on in the markets here, because if you don't know what an options contract is, you don't know what the futures market is, you don't know what this is, you don't know what that is, you could lose some money and burn it very, very quick. So that was kind of my learning point here was I'm glad he made money, but be mindful of the amount of money that you could lose if you don't know the positions. When I trade my options, when I'm selling options, buying options, I'm researching for a couple of days how the strategy works, what to look for, how to manage it, to make sure I build my foundation up. Because I do some advanced option strategies here. So to make sure I'm doing some of these advanced strategies well, I'm managing my positions, but I'm doing a lot of research. I'm going online. I'm looking at different ways of researching it. I'm looking at simulations. I'm looking at all different things here to give myself this concrete knowledge so when I can open my trade, I know what to look for, when to close, when to open, and when to just sit back and do nothing, right? So it's always good to do research. You can never do too much of it. This one to me was very interesting also, and this is actually very, very cool to me. This is from portcedu.com's website. Apparently there's a little watermark down here in the bottom right-hand corner here. But he goes, my Baba position is finally profitable after holding it for 5 years. And this is really interesting because it actually, I believe this is showing him or shows us when he bought, when he sold, when he bought, sold, bought, and then bought again. And now he's about the break-even price and a little bit more profit at the time of recording this, which is good. It took 5 years, which obviously is a little bit nerve-wracking, but that's really, really good to hear. Now, here's the thing that's really interesting is that this actually kind of gives you the mindset almost of the psychology of the human mind here. And this is what's very interesting to me, okay? Watch what happens here. Bought, sold. Great trade here. Buy low, sell high. Bought in on the dip, sold a little bit at basically about break even looks like. Then he started buying on the dip, but as it continued to dip more, this person stopped buying. Look at that. Buy. There's like 3 or 4 here, not in sync reference, but all these different buys are happening here. Then he just stopped right here. It came down more, bought a little bit, and now it started to recover. So it's very interesting that, like, as the human mind probably saw this, and this is how I'm looking at it, is that you see the stock price continue to fall. He bought here, and it falls another 5-10%. You're like, nah, I'm done. I can't keep buying this. I don't have any cash left, maybe, or I don't know what's going on anymore with this company. I'm not really sure. But instead of just keeping buying on the way down, he stopped. From like January, he's literally bought like a year. It's like a year has gone by without him buying anything on Alibaba. And then it starts kind of have this recovery period. So it's very interesting to see how like our minds work in that way, where if it keeps dropping, He's catching the falling knife. Don't catch the falling knife. Stop buying here. And if you bought a little bit more, you could have gotten a little bit of a lower cost basis. Then he just stopped buying entirely, and now he's back to being profitable. So this is an example of, if you dollar cost average on a stock, don't do it all at once. Don't just keep buying. Do it in incremental periods, spread out the money a little bit, and that will give your break even a little bit lower here. But it's a very, very cool chart. I would love to see if like Robinhood would have this or Webull in the future, like showing the visual about when you bought and when you sold. I think it's very, very cool. But shout out to you. I'm glad you're making money on it now. Absolutely awesome. This person said, avoid the green radioactive glowing stuff. Too risky. And the company is CCO. And this person bought in at $16 a share on average for 15,000 shares. And he is up over 1.4, almost $1.5 million, Canadian dollars, of course, on this one company alone. Look at this rally over the last 5 years. Again, the radioactive green stuff we talk about is like uranium, nuclear reactor, nuclear energy, all that kind of stuff there. And man, has this dude made $1.5 million. And it's only cost about $200K to get started. Man, that's unbelievable. So shout out to you, my friend, for making over $1 million in this trade. That's absolutely awesome. Love that. This person put a chart up on it. It's not actually his position here, but it's another interesting talking point. $10,000 of Intel bought 25 years ago is worth $10,000 today, which is what he's showing right here. Here's $10,000 there, and now we're back to $10,000 here. And yes and no. Yes, it's still worth $10,000, but things to keep in mind about Intel was a dividend-paying company for many, many years. I don't know how many years it was before they cut their dividend, but Intel was paying their dividend for many, 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 many years. So the dividend payouts, if you dividend drip invested them, if you dripped your dividends back into the company, you still would have made money between 25 years ago and now. If you sold options on the $10,000 of Intel shares, you would have made money also. So yes, if you just bought 10,000, didn't reinvest the dividends, even if you didn't reinvest the dividends, you'd still be making money here. But if you didn't sell covered calls on your shares, potentially, sure, yeah, of course. But there is still money that is made here. And also, yeah, I really just think that, you have your dividends that come in here. Again, it went as low as about $3,000, but that's the dot-com bubble that you're hitting right here. Then you have the housing market crisis. Then you have the big rally up. Then you have pandemic. Then you have, rate hikes, bringing it back down again, and like everything going on with this company here. But, at the end of the day, $10,000 of Intel gives you quite a few amount of shares. You could sell covered calls again, so it could have made money along the entire 25 years. You still would definitely be up more than $10,000 today. I can promise you that. But so that's what I was interesting to say. Like, with dividends, with that, even though the value, yes, you get the same amount, you're back to $10,000 again, you still aren't factoring in dividends, and cover calls and that kind of stuff. So, and we're back to Open Door. $50,000 YOLO Open Door position. He wants Open Door to go to 1205. And I'm telling you this right now, on this recent run-up, you can only get this run-up for so long until profits are being pulled out from underneath. And 50K is unbelievable. And also, look at the expiration date. He gave himself like 2 weeks. What are we doing? 2 weeks for Open Door to pump even higher? This is where those risky plays can give you some very, very unbelievable returns, but very, 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 very risky. And again, Open Door is still a meme stock, no matter what people say. People talk about the rate cuts and how they're doing beneficial for Open Door and all that. Yes. But still, not a profitable company yet. Still considered a meme stock by a lot of people. Has come back down from that recent pullback. Has had a big pullback recently as a result of it. What I would have done if I was this guy right here, I would have done longer expiration dates. I also would have dollar cost averaged more in this case, but good Lord, my friend. Unreal. Next up, I too know why the Intel Nanoman, I don't know what he's talking about here, but he's been holding Intel shares that have an average cost basis of $43 a share right now. But again, he owns 1,389 shares. Bro, sell some covered calls. You'll make some good money on that. I promise you. Sell some covered calls. You'll be fine, okay? Maybe they bring the dividend back. That'll be bullish for the company. The big reason behind the Intel pump is that NVIDIA partnered with them to buy their chips and all that kind of stuff. It was like a lot of money, like at least like I want to say a couple $1 billion, maybe probably worth of it, if I'm not mistaken. But that's why it was shot by it was up 22.5% today, or yesterday, or whatever. September 18th, whatever, it doesn't matter. Up this week, up 23%. Like, it's unbelievable. I had a huge ride back up to $30 a share here, which is absolutely insane. But again, the thing to keep in mind about is that, dude, you haven't lost $17,000 until you sell your shares. Sell cover calls, make some passive income, you're good to go. This person, his trade here, I had to use 2 slides for because he has 3 images here. My dude right here, okay? A lot of contracts, first of all. But $208,000 worth into QuantumScape $10 calls. Bought them on the 15th, expire on the 19th. A 4-day, $250,000 almost play on QuantumScape to go from 1034 to 1056. That's what's happening over here on the left. On the right, look at this. It's at $11.14 on the screenshot here. He's up to $250,000. He's up right there. $250,000. And then look at this. As you can see, he was very, very smart with this trade here. What did he do? He had 4,249 contracts. He then trimmed down 200 of them. As you can see here, he's down 200 contracts here. Now he's down, 3,000 or like 2,400 contracts took off right here. So he's taken his profits out. It looks like he took out maybe his initial investment. I could be wrong on that one. But he took out or maybe he took out just the profits. It has just the initial investment left. I'm not really quite sure. But I'm hoping that he was able to either he exercised this, maybe, or he sold it all. I'm not really sure, but this is a smart way of doing this, okay? Yes, this is very, very degenerate, okay? 4 days, $250,000, unbelievable. But he took off some shares for a loss. He then made some money there. Then he took some profits off again. So he took the profits out as he went. Absolutely love it. Unbelievable play from this guy. Shout out to you, my friend. This person did a SPX, which is the S&P 500 index, leap option, but I have never seen a leap this far out. The leap is for 2030. 5 years. Basically looking for SPX to double in value from now until 2030. So double in value about 5 years, which, would be a little, I feel like maybe optimistic. A little less than double it, I guess, in a way. But he's already up $5,600. And honestly, like you make 150%, I wouldn't even mind just closing that now and waiting for a re-entry because markets are at all-time highs right now. I wouldn't even say, I would say get rid of this now, take that $6,000. Markets are all-time highs. We're probably going to be due for some pullback, I feel like, at some point soon with the markets. So wouldn't be too bad. But I've never seen a leap that far out so far. 2030. My dude went 5 years out. Hopefully it works out for him. This person went all in on HUT 8. I checked his portfolio. He is all in on HUT 8. And he's made almost £500,000. 1,258% return. And I'm guessing he's still holding. But man, if you are still holding, I would take some money out, put into, a high yield savings account, maybe for a little bit, or to the S&P 500 dollar cost average it. My dude's up over $500,000. He took an investment that was like, what, $50,000? And now it's at $500,000. Unbelievable. This person bought another call option. See you in 2 years, Oracle. He bought $225,000 of Oracle call options here. Break even $344. But he's only looking at 2 years out here for a leap option. Absolutely smart play here. Oracle is a very, very big company right now. They had really good earnings in terms of partnering with OpenAI, even though they missed on their earnings, I believe, last time. But they pumped up a lot because of the OpenAI partnership they had with ChatGPT, Sam Altman. All this stuff happened. Market loved it. It was absolutely awesome. And not only that, people are talking about now Oracle having some sort of ownership in TikTok, which could also send this thing through the roof as well. So an absolutely amazing play that we see here from Oracle. Shout out to you for that one. And hope it works out. And again, it's got 2 years to let it kind of sit there and do its thing and take as long as it needs to. SRPT, stock 280K YOLO, MIF'd. And it's a 100% portfolio with $250,000, down about $14,000. And again, just as a reminder, if you're doing this, hopefully you're selling some cover calls on these shares here. Definitely helps out to kind of reduce your risk. And you're down about $1. So, if you have the conviction, stay with your conviction. But, try to offset that a little bit, maybe with, selling some cover calls. Not on all the shares, but, he could do 1,550 contracts of it. He could do maybe half of it, like 700 contracts, offset it, get a little bit of premiums there, offset his cost basis. But man, that is a risky play. $250,000 all in SRPT. And last but not least, what better way to end it off with a Loan Depot $500,000 holding. Basically, people are connecting Open Door to Loan Depot because Loan Depot focuses on mortgages and stuff like that and interest rates. And with rates coming down, it could be good for Loan Depot, just like it was for Open Door. And all this kind of stuff happened here. And he's up, $14,000. But if you look, today's return, he was up $43,000. So he was down about, $30,000 before the time of recording at the time of the market open. I don't know how to feel about all in on Open or on Loan Depot, but I would sell some cover calls for some premiums. But, I don't know. That's all I got for today here, guys. So that is it for Crazy Pets in Wall Street. If you made it this far in the video, please make sure you like the video, subscribe to the channel, turn on the notifications as per usual. Hopefully make money in the market just like some of these people here were. Be smart, be safe as always, and I will catch you guys in the next video.